Hey guys, how we doing? Crypto Insight UK here, bringing you back another video. So the world is crazy right now, and we're going to get into that in a second. But I want to just first off say congratulations to everybody who's been dollar cost averaging over the last few weeks. This doesn't particularly mean that I think the bottom is in. Again, I don't know. I don't know whether we come down and sweep this liquidity here, but the DCA levels that we've been buying at through all the fear, all the name calling, the shit throwing, seem to be at very minimum a decent place to dollar cost average and potentially in and towards the bottom. And why do I say that at a point like this when nothing is confirmed yet and the world is still chaotic, especially with the liquidity below us? As I said, we still could come down and revisit these lows. I'm not ruling that out at all. But the areas we've been buying are clearly good, because even if we get the chance to revisit them, I don't think we go too much lower. Sorry, I got hiccups. Just had my second coffee of the day. I was banging. I love coffee. If we get that chance, then it's still a good time to dollar cost average again. And if we don't, we could be close to, if not have seen the bottom. And why do I think this? Well, let's have a look at what's going on in the world. Obviously, we can see there's loads of liquidity above us for Bitcoin up towards like 91k. And as we gain momentum here, we probably do push in towards these areas. The biggest liquidity pockets that we've got are above us still. Although, as I said, there is deep liquidity below us, but look all the way up here at like, I don't know, 107,000. And if we go out to the daily time frame, something we've been discussing a lot is the liquidity up above us. Let's see if this loads. There's loads up above us all the way to like $130,000 Bitcoin. That's where the liquidity is the deepest. So that indicates that once we start to break out of this downtrend, like once you start to see a push above like this level really that we're starting to press against again, we should accelerate to the upside pretty quickly, especially as we've seen the DXY absolutely tanking, shit in the bed. Like, I haven't seen the DXY move like this before really, or not for a while, and this was pre the bottom for crypto here. And we've talked about the relationship between the DXY and crypto a lot. We'll put Bitcoin back on here. Look, we've used this 11-week lag for the inverse relationship between Bitcoin and the DXY. When we started to drop the DXY, we then bottomed out, and then this drop here potentially correlates to this whole rise here for Bitcoin. You could say almost to this point. So you could say the rise from like, what is this? Let's say 17k all the way to 73k correlated in this percentage drop here. I'll see what that drop is, because after that we basically just ranged for the DXY. So an 11% drop gave us a 10x rise. Well, not a 10x rise, it's like a 5x rise in Bitcoin. And right now, so far, we've had like a 10% drop. So could we get like a 4 or 5x from here in Bitcoin price action? Obviously, it's not going to be completely correlated as the market cap's bigger, but you can see the picture that I'm trying to draw, even though it's not going to be perfect. But that could bring Bitcoin up to, I don't know, 5x would be 400k. So let's say like 250, 300,000 based on that, obviously, logic alone. The other thing that we're seeing is, with everything, like really everyone panicking, S&P obviously down yesterday 4%, the stock market's in literally like panic stations, panic mode. We've got bonds blowing up, 30-year bonds everyone's panicking about. Gold is at all-time highs. Look at it today. Like, we've had 3 successive green days, and gold at $3,200, which is flipping huge price action for gold. But what we're starting to see is Bitcoin and crypto also catching a bid whilst people are moving to the safety trade. This indicates one of two things to me: either that the paradigm is shifting towards crypto becoming, at these levels, crypto being a safety trade and being a value trade at these levels, and or this is the second scenario, is the forward-looking asset, which I've always said the fastest horse in a liquidity positive environment is crypto, and people are starting to price that in now. We've been a bit early with the thought process, but that's basically where we are. The world is in complete chaos, yet crypto is catching a bid. And what we have normally seen is crypto act a bit like a beta play on equities or tech stocks. So when they come down, crypto comes down more, and when they go up, crypto goes up more. But it's starting to decouple now, and we're starting to see that it's starting to find its own footing potentially as a neutral asset that is quite liquidity positive, but also potentially a safety trade around the world. So we might have seen the bottom. That's genuinely what I think. If we look at XRP specifically, this leverage zone that we've talked about so much, I'm going to take it on a 3-day time frame. We've respected it so well. Again, we've only wicked into this zone. We've not had any 3-day closes in below the 190 to 164. Are we going to get offered the golden entry? Again, I do not know. I'm not here to say that I think that the bottom is definitely in. I'm leaning more towards the fact that it is, because what I think is going to happen next is if we continue to have issues in the bond market, there's going to be an intervention. Everyone's shitting themselves about the bond market. I think a great tweet here from, I don't know who it was by, so I don't want to butcher them. Tad tweets, he said, USD is falling because Japan is selling treasuries, which makes the yen rise in relation to the yuan, so China has room to reinflate its economy. US Treasuries spiking as Japan sells, but Federal Reserve stands by ready to deal with that problem by buying them if necessary, and inflation is plunging. This sounds exactly like what Raoul Pal and Julian Batal have been assuring us would happen for months, despite how crazy it sounded. If it's true, it's the greatest macro call ever, which explains why the Japanese delegation, or what the Japanese delegation may be doing in Washington, D.C. with Scott Bessent this week. They're not talking about trade at all. The real purpose is that they're coordinating an orderly drop in the dollar and rise in the yen. So there's a deal being done between Japan, the USA, and China right now. That's what he's saying. And this is what we've been discussing. And this deal leads to liquidity coming out of China, devaluing of the dollar, which is liquidity positive for the world essentially, and probably stimulus in the US by the Treasury buying back bonds, which is stealth quantitative easing or yield curve control. Net positive for risk on assets. That's what I think comes next. Expectations managed, net liquidity positive environment, depreciation of the dollar and fiat currency worldwide. We're seeing the issues arise everywhere. When the uptick comes, I think crypto is mispriced based on uncertainty and fear to the downside, which I think has got itself into a self-reinforcing reflexive loop, and the upside is going to be as dramatic as the downside has felt. That's essentially where I think we are. Again, whether we've got a few weeks to work this out, whether there's still some arguments to be had, some posturing, the USA aren't going to do this, China are going to do this, whatever, you can see the writing is on the wall, because this is one of the first times that the DXY has fallen heavily, equities are down, and gold is up, and crypto is up. This is telling you there is a paradigm shift happening right in front of your eyes. Believe it or not, that's up to you. I can't, that's my opinion as well. Like I can't say for sure, but this is what I think. Also, XRP ETH had its highest daily close yesterday since, this is off topic, a different topic. XRP ETH had its highest daily close yesterday since like 2020, April 2020. And as much as everyone's been saying this has been bearish divergence, and I kind of got pulled into that trap, which you can understand, because there is bearish divergences. Look on the daily time frame for XRP ETH, although it looks like we're starting to break out of that now. I've been saying that I thought this is essentially vertical accumulation, and XRP was showing more strength than most. And I think the thesis that I've come to a conclusion on with my XRP thought process is it's been using this time to catch up where it should be in relation to last bull market. I'm not saying that we're going to have the bull spike from last market that we should have had. Maybe like last market, XRP should have spiked to $8 to $13 and then come back down and be resting at maybe $2 like it is now. I think it's just slowly creeps up to where's fair value comparison to everything else. And this market is still going to have what it should have done this cycle anyway, which I think is going to be anywhere from well, I think minimum 8. I think 8 on the next move realistically. And then I think that I always said $13-ish, but potentially higher, depending on if Bitcoin goes to like 200k plus. XRP will go a lot higher than people expect. And I think that the next move takes us probably towards $8-ish anyway. Let's see, could be wrong, but that's my thought process on that as well. Also, Flare's been catching a bit of a bid the last few days. We have had a bit of a retracement, but we got like almost like a short squeeze out of Flare. But what I think is happening here, people are asking me what I think is going on, and I think there's this lack of liquidity for Flare, meaning that a lot of people who have got Flare have got it like delegated or staked. They're not really selling or doing too much with the asset itself, so there's not a lot to be traded. Because if you've had your asset delegated, you're just receiving Flare every month. Flare drops, so why the exchanges haven't got much to buy or sell. So when buy pressure comes in, price can squeeze pretty high pretty quick. And I think that will be a recurring narrative through Flare's future, because when you start to get F assets and need Flare for collateral for different things, I think that this narrative will continue because people will just be locking their Flare essentially. So there'll be minimal to trade. The other thing that we've talked about a lot is CRV. Luckily, I didn't tweet about this either, but I think I might. Oh no, I didn't. I luckily got into a CRV trade last night in and around this area. Again, didn't tweet it because I think it was a bit of a boredom trade. I think I put the trade on out of boredom and caught the spike. Still in the position, moved my stop loss to just below this area here. It's at like 59, I think it is, 59 cent, yeah, somewhere like here, and I'm just going to let it ride if it does, and if it doesn't, then whatever, it is what it is. Still considering buying a Bored Ape, haven't pulled the trigger on that yet. Not much more to update you with apart from that. Bitcoin dominance sitting at 63%. Do we get that continued push towards the alt season zone or not? I do think that Bitcoin probably catches a bid if and when we get this confirmation of either intervention from the Fed or liquidity provision from China, whichever comes first. Because I think ETFs, people who want to hold Bitcoin as in institutions, will probably bid Bitcoin, and they can get Bitcoin through ETFs, and so maybe it takes a little bit more market dominance before then people who have a lot of Bitcoin start to rotate in the risk curve as liquidity provisions pick up around the world. That's potentially a possible solution or an outcome here. But on the other side of that, I do think as utility comes into play, and we've looked at things like, I think it's Hidden Road, if we forget the name, the prime broker that Ripple have bought, I think Bitcoin loses dominance as people actually use crypto for real world use case. So I think that Bitcoin could spike to these levels, but I think over time, Bitcoin dominance does depreciate indefinitely versus the market. If crypto goes the way that we think it will, $18 trillion, for example, in tokenized assets by 2030, they're not going to be tokenized on Bitcoin. Not saying that Bitcoin doesn't have a place. That's not what I'm saying at all. I think it does. I think it has a big place, just like gold has a big place in our financial system. Bitcoin has a big place in the crypto space, but I don't think it will be as dominant as it has been in the past. I'm going to leave this video there. I'm writing my newsletter right now, guys. So if you want to subscribe to that, it's completely free. A link will be in the description. We're actually like we were 26th trending crypto newsletter in the world last week, which is fantastic. Thank you very much to everyone who reads. It's a chance every week where I get to write my thoughts down and just share them with you guys. And the Crypto Man also gives you his perspective of on-chain analysis. He's going to write about the DXY this week, so I'm going to leave that part out of mine. But yeah, I hope you enjoyed the video, guys. If you did, please do subscribe, share it with a friend, and hit the like button. It helps me out, and it's free to do. Peace up, A-Town down, as Crypto Insight UK would say.